Okay, everybody, here we go. It's me, Gregory Mannarino. Monday, November 27th, 2023. This is my pre-market report. Let's start off with this. The situation is, well, what it is. And what you and I have been covering as of late, we are going to see a phenomenon occur moving forward, more so than we've ever seen before. What am I talking about? It appears that right now, we just finished the best month for this market all year. Why? What is driving this? It's pretty clear to me, and I hope it is to you as well. The promise of much more easy money getting pumped into this market is the driver. The Federal Reserve is buying a lot more debt. This phenomenon, okay, which you and I called before anybody else did, I don't know who else is even talking about this, honestly, is going to get much greater moving forward. You have to understand. Let's talk about what's going on. What do we know is happening? Countries like China, other nations around the world are dumping U.S. debt faster than we've ever seen before. So if these nations are dumping debt, meanwhile, yields are coming down, who's buying it? In any market, there are buyers and there are sellers. Well, this should be pretty obvious to you what I'm leading to. It's the Federal Reserve. They're buying it all, just as you and I have expected them to do for over 10 years. We've covered this here. The mechanism of buying all the debt is going to get even more monumental moving forward. I expect, at least for a while here, for bond yields to remain suppressed. This more so than we've ever seen. Again, and this is going to require a lot more cash to be created out of nothing to buy the debt, which is massively inflationary. You're not allowed to know that. No talking head from the mainstream media propaganda ministries is going to tell you that. No politician is going to tell you that. But it should be pretty obvious as to what's going on. Central banks have one product, you know what I'm going to tell you, and one product only, their ability, to buy anything they want. In this case, buy debt. And they're buying debt with their product, which is their own currency they create out of thin air. That is massively inflationary. This environment, again, is fostering the illusion of liquidity, something I have covered with you for I don't know how freaking long. We are in a liquidity crisis. Cash is drying up. And to understand how this works, again, something I've talked about many, many times, is debt can't just be pulled into the now from the future at its same pace. It must be increased upon, increased upon, increased upon, just to maintain where we are. Okay, now, the real reason this is going on, again, is because it requires more and more cash to be pulled into the system just to maintain it. You understand? Okay. With that said, this mechanism, in order for the Federal Reserve to maintain this illusion, the illusion of the markets, in order for the Federal Reserve and other central banks to maintain the illusion of the market, which is a very powerful thing on the psyche of the people. Again, people see a market going up, they think everything is fine. It's crazy, but it's really true. The economy could not be worse off than we are now. The economic news keeps coming in worse and worse and worse, and this is telling the market and me, and it should be to you, that this mechanism of pumping more cash into the market will continue to a greater amount than we can possibly imagine. Again, presidential selection cycle, the illusion of the market must be maintained, and I really believe that's going to happen. I covered yesterday in my markets a look ahead where the opportunities lie here. Okay, meaning, look, this is what I'm looking to do. I'm not saying that this is right for you or anybody else, all right? But what I'm doing here is I am looking for any opportunity that I can find right now to buy more of this market, okay? To be long the market, as long as they can maintain this illusion of stability in the debt market, which is completely unstable. You know that. The only reason why we're having this phenomenon occur with, if you want to look at the MMRI, Mannarino Market Risk Indicator, again, free to everybody, link in the description of this video. Risk is dropping as the 10-year yield is dropping. Bond yields have been very stable since the last FOMC meeting, where they paused, and then there was all this talk about how they're going to maybe raising rates moving forward. It's nonsense. Look at the dollar. The dollar as well, even this morning, weaker. We know what the Fed's doing. They're dumping dollars. They're buying foreign currencies. They're buying more debt to maintain the illusion of the market, to maintain a risk-on environment, pushing cash into the market. I've been saying now for a couple of weeks that this market is due. I hate to say due, all right? My fellow traders, my fellow lions out here, you know the market's never due for anything, but this has been quite an astonishing turn of events. We went from the most vicious bear market in bonds in the history of the world. This is the truth. We've never seen anything like it, to now a bull market. How did that happen? Well, it's the Fed. They're buying it all. And again, the Fed also buys stocks, okay? They say they don't, but the Fed has a trading desk. They prop up the market by buying specific companies in specific sectors to prop up the market. And that phenomenon, I believe, is going to continue as well. It's very simple to understand the situation if you realize, if you understand how the market looks at risk. If, in fact, the Federal Reserve can keep risk at bay, I've been telling you this for months, by buying more debt, by keeping rates artificially suppressed. Now, I want you to think about this. If we understand, we've covered this as well, that the Fed is in here buying all the debt, which they are. I mean, we have countries like China and others dumping the debt. There has to be a buyer. It's the Fed. The Fed's buying it all. To maintain that illusion of stability, they must buy it all. The illusion of stability is going to drive more cash into the stock market. The illusion of stability is going to present opportunities in other assets as well. I covered this yesterday in commodities. Crude oil is under pressure right now. I think for the long run, you need to have exposure to commodities, especially crude oil. You got the investment banks leveraged beyond their eyeballs in crude oil. They're not going to allow it to stay low. Maybe just for now to foster that illusion of inflation is dropping. Oh, look at energy prices. It's not going to last. I think it's pretty obvious here. Commodities in general, the place to be, in my opinion. You all know that. So what am I doing? I'm going to look to increase exposure to commodities. I'm going to be looking for opportunities to get long this market as well. Again, there's always opportunity here. Okay, you can look at this thing and it is coming apart. Absolutely, we must be aware of what's going on. But at the same time, we got to say, okay, where are the opportunities here? What can I do to take advantage of this engineered environment? It's completely engineered. It's completely fake. All right. There's no asset today. I've been telling you this too, that has a real price discovery mechanism behind it. Think about it. When you have central banks doing what they're doing, artificially suppressing rates, buying all the debt, understanding that the debt market is the driver, the number one driver of price action of every single other asset. Well, it makes it pretty obvious to understand what we need to do. You understand? I hope you do. Anyway, so, but I want you to keep something else in mind here. We're in what I would say, and it's pretty hard to argue that this is not what's happening here, a very low volatility environment. Low volatility environments precede high volatility environments. Does that make sense to you? Okay. I hope it does. So we can expect some kind of volatility moving forward, but I don't think it's actually going to happen until after the fat cats of these corporations get their multi-million-dollar bonuses that the Fed has promised them by keeping rates suppressed, by keeping the risk on. And you know how this works, and I've told you this a million times. I'll tell you again if you're new here. The Federal Reserve plays a game every year. They make sure that the CEOs and the big wigs over at these corporations get their year-end bonuses in the multi-millions of dollars by increasing their stock share price. A CEO of a corporation, he or she, their year-end bonus is based on year-end stock price, period. The higher that is, the bigger their bonus is. You understand? Not so much for you and I. So the Fed is willing to distort the market more so than we have now to make sure that the fat cats get their multi-million-dollar year-end bonuses. You understand? These are things you're never going to get. No one's supposed to know this stuff, but of course, it's important to understand how this all works. So low volatility preceding high volatility. Let's see what happens after the first of the year, people. This market has gotten really stupid. We don't even get drops. We don't get pullbacks anymore. It's a one-way street higher. Although stock futures are lower this morning fractionally. Looking at the market this morning, you got a stable 10-year yield, dollar under a little bit of pressure this morning. Stock futures slightly lower. Crude oil under pressure. Crypto's under pressure. Gold and silver catching a bid. That's the story. That's where we're at. All right, and none of this is... Oh, that's the other thing I want to tell you. If you remember yesterday, I'm just writing a few things down. The narrative is insane. Every single mainstream media outlet is talking about no recession, no recession, no recession, no recession. They're drilling that into people's heads. No recession, no recession, no recession. We are in a full-blown... This is worse than a recession right now. All right? We have people falling to the lower rung of society faster than we've ever seen before. People buried in debt beyond their eyeballs. They can't pay bills. Loan defaults across the board are rising at their fastest pace ever on record. What people are earning based against inflation, what's known as real wages, continues to drop. People are suffering, but you're not supposed to know that. It's the illusion of the market, okay? And most people just don't get it. But you do, because you follow this blog. All right, people, look, I covered a lot here with you. I want to hear from you. Please ponder the things I'm speaking about. Comment. I will read the comments, I promise. Share the video. Get it out there. Please, if you got something out of this, those thumbs up are very valuable. It lets the algorithms pick up the video. All right, with that said, I will see all of you live, 4:05 p.m. Eastern Time, live stream. Have some questions ready for me. Let's get through this as we always do. They can't beat us. I don't care what they do. I don't care what they try to do. We are keenly aware of what's happening and what we need to do about it. And that's where the opportunity lies for every single one of us. All right? Love you live from the heart. See you later.